That year, crypto took off, Bitcoin, and we were the first public asset manager to give our clients exposure to Bitcoin through GBTC, which was a grantor trust at the time. And Bitcoin in 2017 went from less than $1,000 to $20,000 by the end of the year. And so that many people had in 2015, when we first put it in the portfolio, dismissed it as a marketing gimmick. Many in the ETF space, because we had just started, oh, right, marketing gimmick. But it wasn't. In fact, the more I heard that, I said, oh my goodness, nobody really understands how big this is going to become. I was on a show for the first time after the company started in 2015, and I made the comment back then that I thought he was the greatest inventor of our age. And of course, we had just started the company, and I walked out of that program thinking, oh no, I hope I'm right on this, because I just said that and that will be replayed.
At the time, this was a radical idea. ETFs were supposed to track indexes, not disrupt them. When her firm's leadership balked, she chose conviction over consensus. That decision would define her legacy. By 2017, ARK Invest had broken even, and that same year, something extraordinary happened. Bitcoin exploded from under $1,000 to nearly $20,000. ARK became the first public asset manager to offer exposure to Bitcoin through GBTC, a move many dismissed as a marketing gimmick.
Exemptive relief to start a fully active equity ETF, the first one and so I said, I'll do that. And then, when others in the organization got involved, it became quite controversial. So, it was good for me. I didn't realize how good it would be over the long term that we agreed to disagree, and I was able to go on my merry way. A couple of things. 2017 was critical, I think. So we started in 14. 2017 was when we broke even and then hit our hockey stick. That year, crypto took off, Bitcoin, and we were the first public asset manager to give our clients exposure to Bitcoin through GBTC, which was a grantor trust at the time. And Bitcoin in 2017 went from less than $1,000 to $20,000 by the end of the year. And so that many people had in 2015, when we first put it in the portfolio, dismissed it as a marketing gimmick. Many in the ETF space, because we had just started, oh, right, marketing gimmick. But it wasn't. In fact, the more I heard that, I said, oh my goodness, nobody really understands how big this is going to become. This market, the stock market, is climbing the proverbial wall of worry. And it is broadening out. In fact, that concentration towards the Mag 6 is starting to broaden out. That's a very strong bull market. Now, why is this happening? Yes, the headlines blare negative news, as you say. It seems to get a lot more attention. If you look under the covers, at least in the United States, there are some provocative changes taking place in terms of deregulation. I don't think people understand how much deregulation is taking place in the U.S. In every industry, and then the one big beautiful bill, OB3, we've nicknamed it OB3. Underneath those covers are tax cuts that I don't think many people, even in the United States, understand, because they're mostly focused on the corporate sector, and they're allowing full expensing of structures, equipment, domestic R&D, and software in year one, first year of service. That is taking the effective tax rate in the United States from 21%, where it is today. This is effective. It'll still be there, 21% down to 10. So it's in the 10 to 12% range. some of the lowest in the world. And so you hear a lot of people saying, okay, American exceptionalism is dead. The dollar's demise is upon us. And first half of the year, biggest decline in the dollar since 1973. That was all true. But we believe that the return on invested capital in the United States, because of the deregulation and tax changes, return on invested capital in the United States is going to increase relative to that in the rest of the world. That's dollar positive. That is dollar positive. So I think that's why the markets are powering forward in the U.S.
In the U.S., an Uber ride costs anywhere from $2 to $8 per mile. A Tesla Robo-taxi, powered by AI and autonomy, could reduce that cost to a fraction of a dollar. Meanwhile, in China, where rides are already cheap, the economics don't work as well. That's why Cathie believes the United States will be the world's largest robo-taxi market.
Many people think we don't, but it is a part of our discipline, and I'll get to that in a moment. I think many investors in the United States are very focused on the short term. And the short term means they want their profits now, their dividends now, their share repurchases now. Companies very focused on innovation are actually sacrificing short-term profitability in order to capitalize on these massive opportunities. That's what we do. So if you're asking me that question, yes, I think there's too much focus on the very short term. Our investment time horizon is 5 years. And when it comes to valuation, we make the assumption that whatever premium to the market our portfolios are valued at now, that premium to the market is going to compress towards a market multiple within 5 years. So we are looking at valuation as a headwind for us in the next 5 years. And our analysts have to believe that the revenue growth and margin expansion in the portfolios and associated with each stock are going to be strong enough to overwhelm the valuation compression and deliver our investors a minimum hurdle rate of return of 15% at a compound annual rate. Mm-hmm. I was on a show for the first time after the company started in 2015, and I made the comment back then that I thought he was the greatest inventor of our age. And of course, we had just started the company, and I walked out of that program thinking, oh no, I hope I'm right on this, because I just said that and that will be replayed. But it is true. It is true. He's proven it out. He's a genius. As we said when the split happened, mm-hmm. we didn't know if it was engineered partly and got out of hand, engineered partly because what does President Xi Jinping have to hold over President Trump's head? Tesla. A huge part of Tesla's production and consumption comes from China. So was that somewhat manufactured and then went way off the rails?
Have you asked Elon about that?
I have not. I stay away from politics. We just keep our focus on the technology. But my hypothesis was that might have been true. And even if that was true, and even if it was a bad breakup, which it seemed to be, but that President Trump needed Elon Musk's genius to be number one in space. And he's a realist, President Trump. Number one in space. I mean, Tesla has right now, I think 95% of all the satellites up in space. It's going to be very hard for anyone to break through that. Winner take most again. I think in the U.S., for example, which we think will be the largest market. We don't think China will be the largest market because the cost to ride in a taxi there is 35 cents per mile, right? And in the U.S., the cost per mile for an Uber, minimum $2, and at
New York
surge
City,
time,
it's like a joke.
$4 to $8. It's ridiculous. So it's going to be much more valuable in the United States. And in the United States, we have two players. Everyone else has failed. I know that Zoox with Amazon is trying to break in, but they've been working at it for a while. The two so far are Tesla and Waymo. Waymo commercialized way before Tesla in 2018 or 19. Tesla commercialized just this June in Austin, Texas. But now we're watching the race, and Tesla is moving very quickly. Waymo's trying to keep up. We think Tesla wins the race, mostly because it is vertically integrated from a manufacturing point of view, whereas Waymo is dependent on other auto manufacturers, and it's dependent on a hardware stack that is much more expensive. It has 23 sensors. So we've got LiDAR, radar, and then just plain computer vision. Tesla's relying only on 9 sensors, computer vision alone. And the philosophy there is, hey, how do we drive cars, human beings? With 2 sensors, our eyes, right? Okay, so Tesla has 9 and believes that a Tesla car will be 10 times safer. It's almost as safe as a human being right now, 10 times safer in the next few years.
She calls AI the new electricity, the catalyst that will make innovation across sectors not only inevitable, but unstoppable. From genomic sequencing to robotics, energy storage to blockchain infrastructure, ARK's conviction is simple. Disruptive innovation is compounding faster than most investors realize.